And yet another signpost en route to London and New York, losing precious metals price discovery power to Shanghai and Singapore for both precious metals, derivatives, and physical bullion in the decades unfolding. This week, the London Bullion Market Association renounced what it claims was a data entry error, after the group falsely reported a dramatic escalation from February to March 2021 of the supposed silver being held amongst the largest ETF custodian bullion banks in London. They exaggerated total London silver holdings by over 106 million ounces for roughly 30 days of time, from April 9th, 2021 till about May 10th, 2021. On this same YouTube channel you're listening to now, just over a month ago, we openly mocked the LBMA's then reported figures, confidently knowing, in an acutely silver bullion squeezed market, you don't come up with 1/10 of world silver supply within 30 days of time in one central, seemingly lawless London trading hub that easy. Here's what we said just over a month ago, April 9, 2021, the same day the LBMA misrepresented London's March silver holdings with ridiculous inventory escalation claims. The London Bullion Market Association made news today, publishing a new record high volume of supposed silver underlying all the various ETFs and unclaimed silver bullion float custodianed in London. The claim made is that London increased its silver fractional reserve pile by over 124 million ounces in the month of March 2021. So just over 431 of this roughly 288,000 ounce silver bullion pile supposedly flowed into London in the last 31 days of time. For further perspective, imagine as if the entire COMEX registered supposedly deliverable silver pile equivalent poured into London vaults last month alone. And for another analogy on how unbelievable size this claim is, it's akin to just under the entire underlying PSOV silver bullion pile moving into London in, again, 1 month of time. All of it flowing into supposedly these individual or collective London 6 silver vaults. It was not but a few months ago when estimates were that London only had about 100 million ounces of silver bullion floating unclaimed by ETFs in the system. Apparently now, based on their not transparent claims, they have a little bit more breathing room, supposedly. The silver market onlookers, like ourselves, see a combination of incompetence and chicanery, leaning more towards the latter when we studied the track record of London in the gold market. We'll leave an 11-minute expose on the issue below, illustrating the correlation between the LBMA's coming into existence in 1987 and a widening divergence between East and Western aggregated price data that followed. Suffice to say, historic and forensic price data evidence shows that they called the AM and PM gold and silver price fixes tongue-in-cheek amongst their unprosecuted insider pals. Hello there, on behalf of SDBullion.com, this is James Anderson bringing you this week's SD Bullion Market Update. Before we continue, smash the like button so others can get this important bullion-related information served to them as well. Before we go any further in this update, a quick word from our show's sponsor and a chance for you to win a 1,000 ounce silver bar. Click the link below if you have interest in entering the contest.
Ever wondered what a 1,000-ounce silver bar looks like? Yeah, it's big. SD Bullion is giving away a 1,000-ounce COMEX silver bar to one lucky participant in our silver bar sweepstakes. This bar is over 68 pounds of pure "can someone help me move this thing" silver goodness. So click the link below and enter for free, because someone has to win it, and you never know. It could be you.
Silver and gold finished the week strongly, but sideways overall, even in the face of a very high official inflation number of 4.2%, which is the largest increase since September 2008. The gold-silver ratio continues zigzagging downwards, now at 67. Quick point of levity, here are price increases in various commodities over the last year of time. The price of gold has been sideways basically, but not likely to last much longer. Lumber continues to moon, as the kids say, in valuation escalation of fourfold since the pandemic hit. Perhaps a new SD Bullion round is in order. Have a look. What do you think? More seriously though, the US fiscal budget deficit, the amount we are overspending versus the taxes collected in 2021 is trending worse than the outsized 2020 debt binge. And there are few signs of this not becoming the new norm. Full fiat Federal Reserve monetization is likely only going to become more obvious as the years unfold. The general population inherently knows big inflation is coming, and you could see that in overall internet search volumes for the word inflation. This chart covers data since 2004. All the way to the far right is where 2021 searches, and you can see there is now a trending spike underway. It's perfect timing for the now underway Wall Street Silver Billboard campaign across the USA and soon internationally. We're going to keep going with the news about London losing its nonsensical hold over the precious metals market 2020s and beyond. After all, the East is the largest consumer of gold and likely to silver, platinum, and palladium to come, as their economic clout likely will increase and further grab price discovery by the horns this decade into the next. The Gold Antitrust Action Committee, or GATA.org, writes, Basel III rules will wreck gold price suppression, LBMA warns Bank of England. Pending Basel III regulations emanating from the Bank for International Settlements could destroy the clearing and settlement system for unallocated, that is, paper or imaginary, gold and silver. The London Bullion Market Association and the World Gold Council warned the Bank of England a week ago. In a 58-page protest submitted to the Bank of England's Prudential Regulation Authority, the LBMA and the World Gold Council complained that the, quote, net stable funding ratio, unquote, provision of the Basel III regulations would require the London bullion banks to hold funds offsetting 85% of the value of the unallocated gold they hold for customers, and the banks could not afford this. Most precious metals held by the LBMA's trade processing banks operating at the London Precious Metals Clearing Limited are, quote, unallocated, unquote, metal, the protest says. According to the protest, the new rules will have a, quote, damaging effect, unquote, on the precious metals clearing and settlement systems, quote, potentially undermining the system completely, unquote. The protest continues. Quote, the required stable funding for short-term assets would significantly increase costs for London Precious Metals Clearing Limited, clearing banks to the point that some would be forced to exit the clearing and settlement system, which may even be at risk of collapsing completely. The protest acknowledges that LBMA member banks obtain gold loans from central banks and reland the metal, quote, to support the liquidity of the market, unquote. The long-standing euphemism for central bank intervention to suppress monetary metal prices and support government fiat currencies and bond IOU issuances. Alistair MacLeod, on behalf of Gold Money, wrote the following. This coming summer's implementation of Basel III rules appears on course to regulate the LBMA out of existence, and with it will go all the associated arbitrage business and position taking on COMEX, because most bullion bank trading desks will cease to exist. The only supply to buy-side speculators of gold and silver contracts will be producer hedging. In recent months, there has been some limited commentary concerning the introduction of Basel III regulations and the implications for precious metals trading. These new regulations are scheduled to be introduced for European banks at the end of June 2021, only 7 weeks' time, and in the UK on January 1st, 2022, affecting all LBMA member banks. He concludes that the recent joint LBMA and World Gold Council protest paper addressed to the British regulator is unlikely to save London's unallocated gold trading market. And because Basel III regulations are scheduled to be introduced into the UK at the year end, all banks in the London gold market can be expected to wind down their exposure well ahead of the deadline. The unallocated forward settlement market will effectively be shut down. Hedging into COMEX futures from this source will also cease. As it is unwound, the withdrawal of synthetic supply has enormous implications for future precious metal prices by transferring pricing power to physical markets, now dominated by China. One additional aside that was updated this week, the gold import data for India is also trending in the right direction, higher. See the gold rupee price breakout over the last few years on this chart? Something similar is coming to India, and it will likely set their silver demand back on fire. See the silver spot price here, the cup and handle, the likely breakout that's ahead in the next year to two. I maintain a much further escalating rupee price for gold in India will by sheer price escalation force lead the poor man on the street to unknowingly join the ongoing silver squeeze as well. The silver squeeze in the Western markets, here in North America especially, continues to drain the COMEX registered silver stockpiles month after month. The second half of this year, 2021, for precious metals is lining up to be a very memorable and potentially historic one. Share this information with those you want to help protect their wealth from the coming inflation. That's all for this week. As always and forever, take great care of yourselves and those you love.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.